Am I supposed to say something like thank you and all this for joining? Okay, go ahead.
Welcome, everyone. Thank you for joining us for today's webinar. My name is Akila, and I'll be the host for today's webinar. Today, we are presenting how to prepare for your year-end audit. It's presented by Timothy Kephart. Just a little housekeeping before we get started. If you have any questions during the presentation, please type them into the question box into your Webinar Ninja control panel. I'll bring them up during the presentation, and we will also have time for questions at the end of the session. Our presenter today is the Assertive Industries Division Vice President, Mr. Kephart. He specializes in supporting mergers, acquisitions, authoring policies and position papers, sales and marketing, programs, team, and the business development. Mr. Kephart deserves a director on several corporate boards and nonprofit where he provides business and organization strategies and often spearheads new initiative implementation. In addition, Mr. Kephart serves the community as an elected leader in his neighborhood organizations, NPU, and on various charter school and advisory councils. Mr. Kephart is often called upon to consult with the management of many Fortune 1000 clients who seek to maximize return on idle, obsolete, and underutilized assets. In addition, he has developed a successful track record of identifying strategic business development and partnership opportunities that have yielded millions for AI clients. With that said, hi, Tim.
Hello, thank you.
How are you today?
I'm doing fine. How are you?
I'm doing great.
Great.
Thank you for asking. So let's talk a bit before the audit. How important is adequate preparation to ensure a successful fixed asset audit?
Well, planning is key for any type of project, and a fixed asset audit certainly is a project that's going to impact an organization greatly. So it's necessary to gather specific asset information, including the fixed asset register. It's important to understand the capitalization policy and the assets that are within scope and out of scope, which equipment, which IT assets, which manufacturing equipment if you're a manufacturer, if there might be vehicles and things like that that are part of your fixed asset base. It's critical to understand that prior to conducting the physical inventory. Identifying key departmental contacts such as your IT leadership, so that when the audit teams are addressing server equipment and sensitive IT equipment, that they have proper notice and escorts to maintain network uptime and things like that. It's important to inform the various departmental team members so that they know that this audit is taking place, so that when a team comes through, they aren't alarmed or in any way, and that they are presenting their assets in the most efficient way possible for the team to gather the information. Looking at facilities floor plans, that's a key thing to making sure that the project is successful, and it allows the physical inventory audit teams to plan their work and to identify sensitive or secure areas ahead of time, and to schedule those areas with the key leadership within the organization. And then, of course, reviewing the fixed asset register itself, which assets are in scope, which assets are out of scope. Does the register include buildings and lands and leasehold improvements that may or may not be part of the audit review? Are there bundled assets, mass assets that have been booked in bulk, singular line items such as server equipment, $100,000, but no additional detail? So there'll be a need to dig further into purchasing records and capital projects records and so on. So planning is a big portion to the process. The physical inventory itself can become a fairly straightforward routine, repetitive routine. But the planning process should identify any issues, concerns, and obstacles ahead of time before the checkered flag is dropped on the physical inventory itself. In addition, the planning process should outline the reporting process. What information is going to be reported, what is the format, what's the content of those reports, and which systems need to be updated with clean asset information, whether it's Oracle or SAP or Great Plains or some other asset management and ERP type of system, what's the format and what test files can be presented ahead of time so that when we get to the checkered flag being finished, to the finish line, that file is known to be acceptable for those systems to update.
Okay. Now you spoke a little bit about records. What happens if there's no real tracking or inaccurate fixed asset records? How does this impact the business?
Well, a business needs to, they need to record their assets for financial accuracy and financial reporting requirements. They need to track their assets and record their assets properly for depreciation, for personal property tax filings, and for just fiduciary responsibility. It's a requirement for any business to acquire, book, depreciate, and financially report, and of course file taxes based on their assets. So if a company's not doing that, they're probably losing out on significant deductions. They're probably misstating their financials. They may be overpaying their personal property taxes, and beyond that, they're operationally inefficient because if they don't know what they have, and if I'm an employee and I need a special piece of equipment, and I go to asset management or accounting or facilities or IT and say, hey, I need this piece of equipment. If the company doesn't know what they have, they're more than likely going to do what we call redundant purchasing an item that you may already have existing in your facilities within your asset base. So it's a complete waste of money, potentially, and it's inefficient from an operational standpoint. You risk serving your clients in the best way. In healthcare, it could be life or death. Patients could die if you don't know where your equipment is and where your assets are. Orders could be missed. Production time could be delayed. It has a major impact on the successful operation of a business.
Okay. You talked about taxes. So what are additional benefits of conducting a fixed asset inventory audit as part of your fiscal year end closing?
There's really kind of, I would say, three key things. One is accurate financial reporting. When you file your year-end financials, the property, plant, and equipment line, that's what we're talking about on the balance sheet. So fixed assets are a part of that. They're typically plant and equipment, property being buildings and physical buildings and raw land and leasehold improvements. But the property and equipment line, those are fixed assets. And so that makes a significant portion of a company's value, typically between 25 to 60% on average of a company's value is in that line. And so fixed assets play a key role in that. So accurate financial reporting for year end, the personal property tax filings. If you have assets that are fully depreciated, they've outlived their useful life, they still have a basis for personal property taxes that are typically 20% of the original acquisition cost. You're going to pay tax on those particular assets. If you physically retire them and you don't know that because you haven't done a physical inventory, you're going to overpay your taxes. I'm in Georgia, I happen to be in Georgia. They had ad valorem on cars and vehicles. If I had 100 cars and I got rid of 10 of them over a year's period of time and I still had 90, I may not remember if I'm not keeping track and keeping good records. And when the taxes come due on my birthday, I may overpay on those. A company that has thousands and thousands of assets, that can be a tremendous amount of money. So accurate and efficient and cost-effective personal property tax filings. And then, of course, we talked about before, efficiency in operating the business. If a company knows what they have, where it is, who has it, what it is, they can reallocate those assets. They can make the forecasting and strategic decisions on upgrading equipment that might bring additional operational efficiencies. And it's just the proper way to do business. And we can certainly help to do that for you.
I think one of the main concerns might be the freezing of business operations during an audit. Is that necessary? And how can an audit run when business operations as well?
So for a fixed asset inventory, we typically conduct a fixed asset inventory during normal business hours. So business continues to run, continues to operate in certain production areas or live areas as it relates to networks and things like that. We would coordinate and schedule times when it might be least impactful for us to conduct the physical inventory. So, but in general, for fixed assets, the business continues to run as is, and there's no break in production or business activities. When you're talking about warehouse inventories, dealing with raw materials or finished goods, oftentimes it's important to freeze those inventories for some hopefully a shortened period of time, so that there's not a lot of transactions taking place when the physical inventory is being done. But for fixed assets, there's no need to shut down business operations.
Okay. And what information should be recorded and verified in each asset record?
Well, the key things that we typically verify would be location. Location could mean the physical location, meaning the building, the floor, the room. It could include the employee custodian who has oversees or has temporary ownership and responsibility for the asset. It could mean cost centers and departments and companies, depending on how a company allocates depreciation and how they're structurally set up corporate-wise. But then the information about the asset itself is typically, standard description, the barcode tag number, the manufacturer, the model, and the serial number when it's available, so that we're providing enough detail so that when the asset needs to be reassigned for others to use, there's enough detail to make a good decision based on it. And also, when it gets retired, more detail about, well, what is that asset specifically, and what's its purpose and what's its value. For most clients, or for many clients, I shouldn't say most, but for many clients, there's historical cost information that's also tied to the asset that we verify and report in our certified reports.
Okay, let's talk a bit about what happens during the actual audit. What are some challenges that companies face when conducting a year-end audit of their fixed assets?
Most of the time when companies attempt the fixed asset audit, it's not a high priority. There's typically not somebody who's specifically assigned to perform that task. So many times what happens is a company will print a list off their fixed asset ledger from their accounting system or their ERP system, and they'll distribute it to department heads and say, hey, please verify that you still have these assets, these 10 or 100 or even 1,000 assets. But meanwhile, that department head has, if they're head of marketing, they have marketing campaigns to run. If they're head of sales, they're more focused on generating revenue and winning new clients. If they're head of IT, they're trying to maintain networks, and they have other priorities. So this is a once a year effort, and it's never seems to be the top priority of these department heads. So a lot of times you won't really get a true audit, verified audit completed by these department heads. It's more likely that you'll either get no response or you'll get a check off that says, yeah, everything's still here, but it may or may not be. It's possible that an employee took a laptop home and never brought it back, or somebody left the company, or something was lost or traded or stolen or damaged, or whatever might happen in the course of an asset's life. So it's hard to do it internally, and that's why we specialize in it. We have teams that this is their number one top priority. This is why we've developed systems, technology, mobile data collection devices with our smartphones to scan barcodes and collect data and verify data. That's why we've been in business, doing these things for about 25 years, over 25 years now. So the biggest obstacle is, I wouldn't say apathy, it's not a priority for anybody in the company other than the finance chief, and that particular person can't by themselves do a physical inventory, and it would not be probably the best use of their time either.
Okay. Now, how would you suggest making sure that every fixed asset is accounted for in the audit?
We accomplish that by during the project setup phase, establishing what's an asset according to this company. Every company has a slightly different definition of what is a capitalized asset. They typically set a threshold level of some dollar amount, $500 and up in original cost, or $1,000 and up. For nonprofits, it might be as low as $100 and up that they capitalize an asset. What types of assets are encompassed within that capitalization threshold? The issue is setting up those parameters and those expectations ahead of time, so that when the physical inventory starts, we have a very clear understanding of what is in scope, what's out of scope, what assets are we looking for, what assets are we not including because they may be an outside vendor's asset. They may be copiers that were leased. They may be vehicles that were leased that are not owned by the company. And then we look at floor plans, and we establish a schedule, and we typically work north to south, east to west, and we're marking as we go which physical locations within the facilities are complete, which ones are incomplete, which ones maybe we have to go back to because there were meetings or locked doors or whatever the case may be. And then as we're doing the physical inventory process, if we're barcode tagging these assets for the first time, then we have a visual identifier that confirms that we've gotten the asset and it's included in the scope of work. And then, of course, our quality control team, led by our project managers, are going back behind our team to verify and to double check and to do spot checks of a certain percentage of assets within each facility to ensure that we're getting 100% wall-to-wall physical inventory.
Okay. Can you talk more about managing and maintaining the fixed asset ledger? The key thing to establish a clean benchmark is that physical inventory. But there are 3 or 4 key things to general asset management that ensures a successful asset management. One would be policies and procedures. Does the company have a written document that outlines the policies and procedures for managing assets? How are assets requested? How are they purchased? How are they received? How are they deployed? How are they booked on the asset register? How are they tagged with barcodes? Who's responsible for each step in that process? What happens when an asset is transferred or physically moved from one location to the next, or perhaps building to building? And then finally, what happens to the asset at the end of its useful life? Is it recycled, retired, traded in, scrapped, donated? What's the decision as it relates to the end of life? And of course, what information gets shared or recorded in the system to ensure that that clean benchmark that's established by a physical inventory is maintained. So it's a multi-pronged process. A physical inventory on its own won't necessarily cure all your ills, but it's the first and most important step in the process to identify what you have, where it is, and how many items you have, and to create an opportunity to track and control. The policy and procedure helps to maintain that with rules and regulations and steps in the process to maintain the benchmark. Okay, and what's your best advice on how assets should be booked and what details should be included there?
In general, assets should be booked individually. They're put into service for the most part individually, and certainly they'll be retired individually. So it's important to book them individually with enough detail to identify them for both operational reasons as well as for retirement. So the basic information that should be included would be a standardized description, a barcode tag that's in the fixed asset register as well as on the actual asset itself, the manufacturer model and serial number when it's available, and of course the historical financial information. How much did it cost? What's its useful life? And then from there, over time, accumulated depreciation and net book value will calculate in any typical asset management system.
Okay. Now, are companies required to keep fixed assets that are no longer in use on the accounting records or books?
No, they're not. They should, if an asset's no longer in use, it should be retired both physically and financially. So remove it from the facility, trade it in, donate it, sell it to employees, scrap it, recycle it, whatever decision fits for that particular asset, and then remove it from your books, because if it's on your books, it should be charged for personal property taxes. And if it's not in service, then that would be, be a waste of money.
Okay. Now, you touched on this topic a little bit, but what would you suggest are the best ways to dispose of fixed assets that are no longer in use?
Well, it depends on the type of asset. For certain assets, there might be a secondary market for it. So even though it may not have value to your company, it may have value to the outside world. So there are companies, and us included, who will identify those assets and present opportunities for resale to the secondary market. So that's an option. And then the other options would be typically, recycling or sale to employees. So those are kind of the three that are the top choices typically.
Okay. How do you determine an asset's cost basis for capitalization and depreciation purposes?
Well, when you buy an asset from a vendor, they're going to have a proposed cost or a billable cost. But the key thing with setting up a proper asset cost basis is looking at the other ancillary costs that are part of putting an asset into service. For example, a Dell server might be, pick a number, $20,000. Let's say it's a pretty robust server. It's $20,000. That may or may not be its cost basis. Typically, that's not its total cost basis. The cost basis should also include the wiring infrastructure, the setup, perhaps some software that was part of putting the asset into service. It could be electricians' costs to run the cabling. So there's certain ancillary costs that make that asset go from something that's in a box to something that's plugged in, live, and active, and serving customers and the business itself.
Okay. Should I capitalize expenditures after acquiring a fixed asset? Let's say it's a car or a building.
Yeah, there'll be, when you acquire an asset, there'll be future costs that can be capitalized that would include upgrades, potential replacement and repair of parts. So those components that are added, or those upgrades or those services that are added in the future, are opportunities to capitalize as well. So yeah, it's an opportunity there. It's something that many companies don't take advantage of, but it's something that we recommend.
Okay. I feel like we've gone through this pretty well, and I have more of an understanding on the whole fixed asset audits. Now, in conclusion, can you tell me what the main benefits of conducting a fixed asset audit would be?
Yeah, there are many. The first would be accurate financial reporting. So if you're a CFO or you're a controller and you're signing off for financials and you're reporting to internal, external auditors, or Wall Street, or your board, or your investors, or whomever, you want to have confidence that what you're putting your name to truly represents what's out there in your facilities, and represents your financial property, plant, and equipment balance sheet. So that's the first thing, is just confidence in your financials. The second thing is reduction in personal property taxes. A fixed asset inventory and reconciliation typically yields as much personal property tax savings for many clients as the cost to provide the service. So it's a positive ROI, and it provides residual savings into the future as well that could far exceed the cost to perform the service. Those are the two key financial things. And then the other issue is just operational efficiency. How do you deploy, allocate, support, and serve your customers as well as your internal teams in the best way possible by providing the assets and equipment that they need at the time that they need it, without expending extra money to buy things that you may already have in your possession that you just don't know about. If you conduct a fixed asset inventory, you can avoid that.
Okay. Now, can you tell me a little bit more about Assertive and what the benefits of hiring a company like Assertive Industries to handle your year-end fixed asset audit would be?
Okay. Yeah, I mean, Assertive Industries, we're headquartered in Atlanta. We do work throughout the world. We have offices in Atlanta, LA, Chicago, Houston, and other major cities in the US, in the UK as well. We work with companies that everybody knows, from Equifax to Whirlpool to Warner Brothers to Weather Channel, IBM, Blue Cross Blue Shield Association, Solera Genomics, many companies, hundreds and hundreds of companies over the last 25 years, a quarter century, believe it or not. And working with us, we specialize in fixed asset management. So you're getting the best and most advanced solutions. You're getting expert team members. You're getting professionalism. You're getting 100% dedication to your fixed assets. And when you hire us to provide a fixed asset audit, you're hiring the best. And our company's been at it for 25 years, and our clients come back to us, and we work with Equifax now for I think 25 years now. So that's a testament to our professionalism and the quality of our work and the professionalism of our team. So hire us, and you won't be sorry that you did.
Thank you. So we do have a special offer for anyone tuning into this webinar today. You can just go ahead and mention it, and you will get 15% off your next audit when you contract with Assertive. Yeah,
absolutely. We look forward to it. Call me, email me. My phone is 678-447-0028, extension 612. I look forward to speaking with you and learning more about your needs and your goals, and helping you with your fixed asset management. Thank you.
We're just going to check to see if we have any questions. No questions. All right. I want to thank you guys for tuning in, and you can catch us on our next webinar.
Thank you.